What is up, everybody? Welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you up to date on what's happening in that crypto space. Now, hope everyone had a good weekend, and how can you not? Waking up this morning, Bitcoin spiking up to 114,000, and it's a little dip beneath that right now. We're at 113,900, but we went from 109, which was going on all weekend long. If you look at that chart, we had this week long, just where we at, where we going, but bam, today price just went up. Now, why did it cause it? Really? I don't know. Just people still buying. As always, it was just in the past, like that little week-long period right here was just weak hands going to the stronger hands. And I don't know. I think also we have like a new all-time hash rate going on with Bitcoin. So that usually causes a nice little price up. Like, where is that article? That'll be this one right here we're going to cover. Yeah, we hit a record 1.2 zeta hashes per second. That's a new milestone. And yeah, when this gets higher, so does Bitcoin's price. So could that be fueling this Bitcoin price? I don't know. Could it be MicroStrategy buying another 196 Bitcoin for $22 million? So he's always buying it. So we're always seeing him in the news. And then who else? It's not just MicroStrategy buying up the Bitcoin. We have Europe's Capital B buys another 12 more Bitcoin. So yeah, it's not a lot compared to Micro's 196, but other companies out there are buying and holding it. So right now, this company is holding at least 2,812 Bitcoin, which is worth $314 million. So yeah, so companies, institutions, they're still buying Bitcoin. We have some news from government and countries out there, some with a little strict rules going on. So we'll see how that plays out. We kind of saw it in America. So maybe they just got to live through it before they realize, okay, let's go a little bit more lenient before we start falling even more behind. But let's go through a couple articles that we have for you. Like Bitcoin's core went through an update. I think it was this past like 2 weeks ago, and Nick Szabo is highlighting some legal risks behind it. So he's come out of the shadows. He hasn't been on social media in a couple of years, but let's hear what he has to say. So Nick Szabo joins the debate as Bitcoin Core v30 update sparks controversy over data limits and potential legal risks. So yeah, if you didn't know, Bitcoin's core did go through an upgrade. And yeah, so let's just go over this. The Bitcoin Core project has announced the second test version of its Bitcoin Core v30 update. The update introduces a new wallet format and allows non-monetary data inclusions. This new version is set to be released in late October after further testing. However, it has stirred controversy within the Bitcoin community. Now, the main issue surrounding the Bitcoin Core update is the changes to the OP-return OP code. The update removes the default 80-byte cap on data storage, allowing up to 4 megabytes per transaction output. Now, this change has sparked intense debate, especially regarding the potential for blockchain bloat. Now, some developers, including Bitcoin maximalists, argue that the update is necessary, and they believe that if users pay transaction fees, they should be able to use the block space as they see fit. And the market forces that they claim will naturally limit malicious usage due to the costs involved. Now, the Bitcoin Core update could increase spam and malware risks. So a significant aspect of Bitcoin's Core v30 update is the expansion of the OP-return. Now, this OP code allows for embedded arbitrary data in Bitcoin transactions with new changes. Now, the data limit is effectively unlimited, which has raised concerns about the network efficiency. Now, critics of Bitcoin's Core update worry that this will lead to a blockchain bloat. If large amounts of non-financial data are included, like Bitcoin nodes will be forced to store more information, and this would result in higher operational costs and could cause the network to become slower and more costly for participants. Furthermore, critics fear that the increased data storage limit will lead to spam and potential malware risks. Now, they argue that allowing such large data blocks could make the network more vulnerable to attacks, and the Bitcoin Core team, however, believes that the update is necessary for the network's growth and flexibility. Now, here is a tweet from Bitcoin's Core project on the v30 upgrade. So a new release candidate of Bitcoin Core v30.orc2 is available for testing. So this is a major release and follows v29.0's work in progress release notes. Now, Nick Szabo has weighed in on the legal risks of the network security. So Bitcoin pioneer Nick Szabo has entered the debate surrounding the Bitcoin Core update. Szabo, who recently turned to social media after a 5-year hiatus, raised concerns about the potential legal risks. He argued that increasing the OP return allowance could create further complications for Bitcoin nodes. He highlighted that the increased data could lead to more dangerous content, being stored on the blockchain, and the network fees protect miners, but they don't do enough to protect full nodes, Szabo stated. So he also pointed out that it's an open legal issue almost everywhere, suggesting that nodes could be held accountable for harmful data. Now, Szabo emphasized that the nature of OP return makes data prunable, which could reduce some legal risks. However, he warned that easily accessible and viewable data could increase legal risks. He said standard formats that are easily accessible are more likely to cause problems with legal authorities. So I guess the return is like the nodes will be more vulnerable to this because it's more data that needs to come in. So I wonder if this relates to we really just got runes and ordinals on Bitcoin's blockchain. That was a big thing that happened because before we never had types of smart contracts out there. But with that was an upgrade, but it takes a lot of data. So the nodes might not be able to handle that extra data, which would cause more increased price action, which we do not want to see. So Nick Szabo has highlighted this and his concerns with it. So we'll see if it gets pushed through or not. We're in testing phases, but this should be released by late October, and we are just around the corner there. Now, other Bitcoin news out there looks like a dormant wallet stirs up after 12 years and moves 400 Bitcoin. So a lot of these dormant Satoshi era wallets are awakening and moving some Bitcoin around. So let's take a look about this, see where he moved it to or what he maybe plans on doing with it. So a dormant Bitcoin wallet from 2013 awakens and transfers 400 Bitcoin worth $44 million, sparking interest in the early Bitcoin activity. Now, a dormant Bitcoin wallet that's been inactive since 2013 has come back to life, transferring 400 Bitcoin to 400 Bitcoin. The transaction took place on Monday, sending Bitcoin worth nearly $44 million to various addresses. And this wallet, linked to Bitcoin's early mining days, has not shown any signs of activity for over a decade. Now, the Satoshi era Bitcoin wallet transfers a large sum. Now, the wallet identified as 1ARUG, last 5 WAWT, and it began transferring its entire balance in several batches. Each transfer consisted of approximately 15 Bitcoin, ultimately draining the entire wallet. Blockchain tracking platform Arkham Intelligence confirmed that the transfers, while Look On Chain revealed the wallet's connection to Bitcoin mining nearly 15 years ago. Now, despite the public nature of blockchain transactions, the owner of the wallet remains anonymous. This move has raised questions as the Bitcoin market has seen significant growth since 2013. At that time, Bitcoin was just worth about $135 per coin, while today it is valued at over $111,000, and we just saw right now it's $113, just about $114, marking an astonishing increase in value, definitely since the $135 per coin. Now, resurgence of Satoshi era wallet. So this isn't the first time we're hearing word about a Satoshi era wallet that's come through. The wallet's reactivation follows a trend of Satoshi-era addresses becoming active again. In recent months, earlier Bitcoin wallets have awakened, including one in September of 2025. The wallet containing 444 Bitcoin moved assets after more than 13 years of dormancy. And here is that tweet about it. So dormant wallet woke up after 12 years, moving 400.08 Bitcoin to multiple new wallets 3 hours ago. Now, in July, investment firm Galaxy Digital also sold over 80,000 Bitcoin valued at $90 billion from an estate connection to an early Bitcoin investor. These events suggest that some early adopters may be adjusting their Bitcoin strategies as Bitcoin prices continue to rise. Many long-term holders are opting to diversify their assets, while with Bitcoin's all-time high reaching $124,457 back in August 2025, investors are reassessing their positions, and the growing activity from early Bitcoin wallets indicate that the market may be entering a new phase as the price of Bitcoin climbs. Now, more holders may take action on the dormant coins. And again, so yeah, if these dormant whales plan on selling it, they're just going to be bought up by the government, institutions, banks out there, and even little guys like us. We're going to still be collecting and hodling it. So some people find it speculative, going just what's going on with these coins? Are they going to sell them? Because, well, why wouldn't they? Are they just re-diversifying their assets? That's a huge gain. These 12, 13-year-old wallets, when they were mining or collecting the Bitcoin, it was only priced at $100 to $150 per coin. Now, with the prices being where they're at, that's 100x. So it makes sense that they'd want to maybe diversify a little bit. And who knows, maybe they're not doing all of it. Maybe they are. But again, it's all speculative right now, but it's always newsworthy when like a dormant wallet just reawakens, because they're moving quite a bit of Bitcoin. So when that does happen, I will share it with you. But now let's talk about the Bitcoin hash rate and how I hit that 1.2 Zeta hash milestone. Now these are Zeta. What does Zeta stand for? Is that like million, hundred? Because I know a hash refers to just at least like a guess that these miners are doing to try to solve the hash. So when it's 1.2 Zeta hashes, oh, that's a ton of guesses per block. But per second. But Bitcoin's network hash rate surged to a new all-time high of 1.2 Zeta hashes per second and has stabilized around 1.039 Zeta hashes. Now, highlighting the industrial nature of the current mining, the milestone comes on the heels of a resurgence in Bitcoin strength, whose price has regained lost ground to reach a high of $112,000 on Monday. Now, reaching a Zeta hash is years of massive investment and infrastructure. These operators have installed huge plants, negotiated power deals as large as a town, and launched chains of specialized mining rigs. Now, growth in hash rate translates to narrow margins. Bitcoin adjusts mining difficulty after every 2016 blocks, keeping the block time constant but squeezing the margins of miners. Now, 1 Zeta hash a second means that per second, the computers that safeguard the Bitcoin network are doing sextillion hashes per second. Whoa, I was saying like thousands, millions, so sextillion. So 1, 2, 3, 4. So we got hundreds, thousands, millions, billions, trillions. Then it goes to quintillions, or then it's sextillion. So that is a lot of guesses happening a second to try to solve a block on Bitcoin's blockchain. So this is an absurdly large figure. Now, is it unprofitable and expensive business operations? Well, they're under pressure, and only companies with modern hardware and affordable electricity can survive. The increase in hash rate was also driven by the investment of large mining operations such as Marathon Digital and Riot Platforms, which have invested in powerful ASICs, which Bitcoin first reached 1 exahash a second in 2016. Now, 9 years later, it has increased that capacity by 1,000-fold. Now, the record hash rate is a sign of resilience over the 2022 downturn. And it's a resilience, and it's showing we're not going anywhere. Now, on-chain metrics point to a shifting Bitcoin market. According to the crypto quant data, the 72-hour funding rate has already become negative, indicating a decrease in selling pressure. Now, such changes historically tend to furnish a short squeeze, which enables the momentum to turn in favor of the buyers. Meanwhile, the spent output profit ratio has approached 1.5. Now, the short-term investors are taking bigger losses, though long-term holders remain stable. Now, this trend has already been observed before the major rebounds in 2024 and indicates the same conditions are existed with former bottom formations. Now, this surge of Bitcoin above 112,000 has reversed much of the fall last week, according to CoinGecko. Now, the growth of 2.5% in 24 hours was facilitated by robust buying over the weekend. Now, the recovery also led to a wide resurgence in altcoins, initiating $354 million in liquidations and taking the overall crypto market value to nearly $4 trillion. Now, market analysts are still comparing the movements of Bitcoin to gold, and Milk Road Macro observed that BTC/USD and gold/USD has had rising wedge patterns. In January, gold went higher, and in March, Bitcoin followed suit with the rise, pause, late spike pattern. Now, should the correlation continue, Bitcoin may escape in October and November, and gold has increased by 10%, yet Bitcoin has, in the past, amplified actions by up to 10 times that. Now, that puts a potential upside in the range of 50% to 100%, giving Bitcoin that target price of 160,000 and 220,000. So when we're calling for like 150,000 Bitcoin, like literally by the end of the month, it's because of these metrics and data we get. So we're speculating it, we're seeing it happen. So it could happen. Will it happen? That's not guaranteed. But it looks highly likely. So the odds are going, it looks like it will, but doesn't mean it's officially going to do it. But meanwhile, traders pointed out that the critical level is at $112,000. And analysts state that the breakout had clear late shorts, and the next resistance was at 114,000, a position above the 112, which would help instill faith and position to the market to gain more in October. So I guess we did kind of get a Rectober, if you consider this little dip right here for the week being a wreck. If you look at the whole month of of September. Actually, no. So we still might actually be in the positive when we look at the long-term run of it. So again, like we've usually, like when you look at the charts, like people have noticed September being low, like low pricing dips happening. But this might be actually the third year in a row that September has defied those odds. And because, 2024 and 2023, we were in the green for positive momentum when it came to Bitcoin's price. So it looks like we might be ending this month as well with a green, not a high green, but at least enough, a pretty good one. And hopefully that leads into a nice October, which we're going to call October, and see what happens. But yeah, so that's what's really been going on with Bitcoin. We have higher new record hash rates. Dormant Bitcoin wallets are popping up, moving crypto around, and the Bitcoin Core update is getting some backlash, but it's just getting some controversial backlash from the community. So we'll see how that plays out. But yeah, so that's basically all the Bitcoin news. And hello, Lena. Thank you for being here on the show. I love seeing all you guys coming in and chatting in the chat bot. But let's continue on with the news. What else do we have? We have some blockchain adoption happening. So not Bitcoin adoption, but blockchain adoption. And looks like Qatar Bank taps JP Morgan's blockchain for faster US dollar payments. Taking a sip of my hot coffee. Now, it's Treasury's dream said that QNB's Kamal Morris highlights how the bank shift to JP Morgan's Connexus blockchain enables near instant 24/7 payments. So yeah, guys, the banks and institutions have been having to get on board with this because, again, this technology is here. It's faster. Right now, we're dealing with just like banks being open Monday to Saturday, set amount of hours, stock market and all that. It's only open from Monday to Friday for this amount of hours. But crypto and blockchain, it's open 24/7. And all these banks and institutions are trying to create their own, or they're going to be using somebody else's, which I think is the next article I got coming for you. But Qatar's National Bank Group, QNB, one of the Middle East's largest banks, has adopted JP Morgan's blockchain platform, Connexus, to process corporate payments in Qatar, according to a Monday Bloomberg report. Now, the switch marks a departure from constraints of traditional banking infrastructure, where cross-border payments are limited to weekdays and can take days to complete. Now, in a Bloomberg interview, Kamal Morris, the executive vice president of the transactional banking at QNB, described the development as a treasurer's dream, pointing out to the 24/7 service window with the blockchain. We can now guarantee payments as fast as 2 minutes, he added. Now, Cointelegraph reached out to QNB for more information, but had not received a response by this publication. Now, Connexus processes $3 billion in daily transactions. So according to the announcement, Connexus processes about $3 billion in daily transactions. While the number looks impressive, it's only a fraction of what JP Morgan is handling, which is about $10 trillion in daily payments. Now, the platform uses a permission blockchain system that lets participating clients move funds held in deposits within JP Morgan in a real-time manner. Now, unlike permissionless networks, a permission blockchain integrates an access control layer. Now, this additional security layer lets network participants perform actions that they are allowed to perform. Now, in June, Connexus collaborated with Chainlink and Ondo Finance to complete a cross-chain delivery versus payment settlements between a public testnet and a permission payment network. Now, the test involved Connexus Digital Payments Permission Network and Ondo's Chains testnet, which focuses on real-world assets and tokenization. Now, JP Morgan's CEO not worried about stablecoins at all. So while JP Morgan's Connexus is processing US dollar payments, JP Morgan CEO Jamie Dimon said in a CNBC interview on September 23rd that he's not particularly worried about stablecoins, indicating that he doesn't see these tokens as a threat to the bank's business model. So despite this, Dimon said that the bank executives must be on top of the development and understand it, pointing to regulatory developments and the sector's growth. Now, real-world assets.xyz data showed that stablecoin net inflows grew by over 320% the third quarter, with Tether's USDT and Circle's USDT leading the charge. So yeah, JP Morgan's not worried about stable coins, and yeah, his company has built a blockchain that they're using. At first, it was for just interpayments between them, testing it out, and now it looks like Qatar Bank's tapping into JP Morgan's blockchain to integrate their system with just faster payments. So again, that was always a problem with the traditional system too. It was like slow payments, right? And fees that got tacked on with it. So if you're trying to send like some money from America to, say, Qatar, you got the wiring fee, the overseas fee, plus that money is not going to get there for a couple of days until it gets confirmed. But now by using blockchain technology, it'll be settled within 2 to 3 minutes. The money's in their account. There is no extra fees attached to it. So everyone's onboarding this new technology just because it's better. And it's like some people may argue that it's like, but what about our system now? Isn't it already good enough? It's not good enough. And blockchain has proven that. Now, so this was one partnership with blockchain technology happening. The next one is Swift unveils a blockchain ledger for global payments, sparking a debate with Ripple because everyone's saying they were going to take over the Swift system and all that. So let's hear about this blockchain ledger they have. So the Swift on Monday said it has partnered with more than 30 global financial institutions and Ethereum blockchain software company Consensus to develop a shared blockchain-based ledger. Now, the global banking system plans to primarily focus on real-time 24/7 cross-border payments, and this move from the firm has sparked debates on how it could go head-to-head with Ripple in providing on-chain payment services. Now, Swift has unveiled its blockchain ledger and plans with Consensus. So during the CBOS 2025 event on September 29th, the Society for Worldwide Interbank Financial Telecommunications disclosed plans to launch a new blockchain-based ledger. Now, this marks a groundbreaking moment for the global financial system and the blockchain industry. Now, through the initial ledger concept, we are paving the way for financial institutions to take the payments experience to the next level with Swift's proven and trusted platform at the center of the industry's digital transformation, said Swift CEO Javier Perez Tasso. Now, over 30 financial institutions globally, such as JP Morgan, HSBC, and Bank of America, are assisting in developing the shared digital ledger, with real-time 24/7 cross-border payments as the initial focus. The institutions will provide feedback on the design of the ledger and implement the prototype in phase 1, and then define its future phases of work later on. Now, here's a list of financial institutions assisting in shared blockchain ledger. So yeah, more than just JP Morgan, Bank of America, we got ABSA, ACBank, ANZ, Banco Santander, Bank of America, Banorte, BBVA, BNB Paribas, BNY, Bradesco, Citibank, Commerzbank, Credit Agricole, DBS Bank, Deutsche Bank, Emirates NBD, First Abu Dhabi Bank, First Red Hand, HSBC, JP Morgan, Mizuho, and leading all the way up to Wells Fargo and Westpac. So there's quite a people working on this distributed ledger. Distributed ledger? This ledger for them. Now, this will further expand the accessibility to regulate tokenized assets and boost blockchain use cases in the financial system. Also, the Swift will roll out our client solution to connect different systems, supporting both private and public networks to ensure safe and secure transactions. Now let's talk about the partnership with Consensus. So Swift has partnered with Ethereum blockchain software firm Consensus to build this prototype of the shared ledger. Now the blockchain ledger will leverage the system's resilience, security, and scalability to bolster cross-border transactions and facilitations. The ledger will record, sequence, and validate transactions and enforce rules through smart contracts. Now, the global banking system has selected Consensus Layer 2 network Linea over Ripple's XRPL for a pilot project and aimed at transitioning interbank messaging and communications on-chain. Now, the ledger will expand the financial communication system's role into the blockchain, helping banks to scale the movement of regulated tokenized value across these digital ecosystems. Now, Swift will only focus on the infrastructure with the types of tokenized eligible on the ledger, depending on the central banks. Now, notably, Swift has worked with Chainlink on numerous initiatives to bridge financial institutions to the blockchain network using existing infrastructure and messaging standards. Now, the Ripple versus Swift debate continues. So meanwhile, Swift's move to integrate blockchain technology and its operations has again raised debates on whether Ripple could effectively steal market share from the firm with its payment solutions using the XRP ledger. Now, XRPL Validator remarks that Swift is in desperate need of blockchain tech and that it shows following his statement. An XRP community member asked him about the possibility of banks agreeing with the new direction and wanting to retain control through a permissioned ledger, thereby killing Ripple's chances of providing a cross-border payment solution. Vet replied, though, stating that the permission ledger solved a lot of problems, but that it lacked what makes blockchain so special. And he added that blockchains are special because they are public, they are decentralized, and neutral, thereby making a case for Ripple's payment solution. So, So what do you think, guys? Do you think because of that, they're going to switch over and start testing XRPL? Do you think they're going to go through this phase 1 phase, see if their blockchain works? If not, will they make that change? I don't know. If they're using the Ethereum's consensus mechanism, I'm pretty sure it will work. So what are your guys' thoughts on XRPL, Ripple, and the SWIFT system? Like, what's going on here? But this is still a debate that's currently happening, and I don't know. I'm personally feeling that Ripple might not be the new switch over, so that's just me saying it. They may still do it, so who knows? But let's take a quick break right now, play a quick commercial ad, and we'll be back with some more cryptocurrency news for you. So see you in a second.
For years, banks promised innovation, but they gave us fees and friction and fine prints. Today, all that changes. Introducing Private Key Bank from Bitcoin Ben's Crypto Club, the world's first Bitcoin native credit union. Rebuilt from the ground up in the heart of El Salvador, a place where your Bitcoin isn't just stored, it grows. Earn 4% interest paid in Bitcoin, compounded, secured, and accessible. No middlemen, no hidden games, just your money working for you. Send funds across borders instantly, without SWIFT codes, without currency conversions. Pay anyone, anywhere, with a tap of a finger. This isn't banking as usual. This is freedom, beautifully engineered. The future of finance is finally here.
And we are back and a little blurry. This camera's autofocus always does that every once in a while. But yes, if you guys want more information about our private key bank, give us a call or text at 941-413-8080 or go to bitcoinben.io and we got more information about the clubs, programs, and the private key capital as well. So yeah, so I just was browsing some Twitter, drinking some coffee during that little break. And let's see, what else? What little tidbit of news did we get during the show? So let's see. Justin, Finnish MP Martin Passy says Bitcoin adoption is reaching a point of no return. The whole world is moving to Bitcoin, and I definitely see it every single day every single day I cover the news. And let's see, let's go through Bitcoin Magazine, see what they're posting. Oh yeah, guys, if you're not aware, tomorrow, September 30th, I think at 11 a.m., we're getting the Michael Saylor exclusive interview, which is going to be pretty good, and you're going to want to listen to it. I know I am going to. And was there anything else that was just posted? Nope, nothing else. All right, so let's continue on with the news, though. What else is happening? Well, it looks like Poland advances strict crypto bill, sparking public backlash. So yeah, Poland's Crypto Asset Market Act awaits Senate review after Sejm approval, sparking a backlash over licensing, fines, and potential prison terms for violation. So, I don't think this is really going to work out, but maybe they just got to live it to see. But Polish lawmakers approved a bill regulating the crypto asset market, introducing key restrictions and establishing a dedicated supervisory authority. Now, Poland's lower house of parliament, the Sejm, voted in favor of Crypto Asset Market Act on Friday, sending the bill to the Senate for consideration. Now, the Bill 1424, which has yet to reflect the apparent third reading vote in the Sejm, introduced a licensing regime for crypto asset service providers, aligning Poland's regulations with European Union markets and crypto asset regulation framework. I think they're following the wrong people to do so because the European Union's not too hot on their crypto regulation. But the bill's passage has sparked a strong community response over its restricted provisions, which introduce criminal liability for violations, including fines of up to 10 million Polish zlotys, which is $2.8 million US, and prison terms of up to 2 years. Now, key bill provisions. The bill designates the Polish Financial Supervision Authority, the Komisja Nadzoru Finanzoego, or it's called the KNF, as the primary regulators of the country's crypto asset market. Now, under the legislation, all CASPSs, including exchanges, issuers, and custody providers, both domestic and foreign, must obtain a license from the KNF to operate in Poland. Now, to secure a license, CASPS are required to submit a comprehensive application detailing their corporate structure, capital adequacy, internal controls, and compliance systems. Now, with risk management policies and anti-money laundering procedures, this is what they need to do. So the project was submitted, referred to the first reading, and now this is about the bill going through. So right now we're waiting on the second reading from the Sejm session. But if the bill is passed and signed into law, the CASPS in Poland will have 6-month transitional period to obtain the required license, and failure to do so could result in cessation of operations and legal consequences. Now, the bill would destroy Poland's crypto market, critics warn, and that's what I'm saying. They're not going to get some innovation going on there because people aren't going to want to do business there. So, receiving 230 votes in favor and the 196 against, Poland's Crypto Asset Market Act has sparked significant backlash from both cryptos industry and some Polish lawmakers. Now, Janusz Kowalski, a member of the Sejm from the opposition Law and Justice Party, criticized Poland's implementation of the EU's MiCA regulation, calling it overly restricted and warning it could jeopardize the country's crypto market and its 3 million crypto holders. Here is this tweet about that. So the Polish implementation of the EU MiCA regulation is 118 pages of over-regulation, contrary to the European Union's plus 0. And the principle, this is just the largest and most restrictive cryptocurrency law in the EU right now. So let's see. For comparison, the Crypto Asset Market Act in other European countries, Germany is only 78 pages, Czech Republic's only 14, 22 in Slovakia and Lithuania, Latvia and Slovenia is 5, Hungary is 9, Romania is 10, Cyprus. So why do they need 118 pages in their restrictions and rules? So yeah, it's not going to look too hot for them. But this is the largest and most restrictive cryptocurrency law in the EU, Kowalski wrote on an X after the bill passed its second reading last Wednesday. So he highlighted that the law's excessive length, describing it as 118 pages of just over-regulation, compared with much shorter crypto legislation in Germany, Czech Republic, and other EU member states. Now, the slowest regulator in the EU. So Tomasz Mencen, a Polish politician and blockchain advocate, highlighted the challenges of implementing the new crypto legislation amid Poland's lengthy regulatory procedures. Now, the KNF is the slowest acting regulator in the EU with an average application processing time of 30 months. He wrote an X post. So, 30 months? Here's his post about that. So, by both experts such as Ms. Skałwanska, passed a bill on the destruction of blockchain and stablecoins in Poland. So now the Senate then necessarily veto Narokin, and one can submit a bill projecting the developing rather than contracting the market of crypto assets in Poland. So yeah, some of the politicians and crypto community, they get it. They understand that this bill is not good, and the people in charge, they need to make some changes because, again, they're just going to hurt their country even further. So according to Mencen, the Sejm's approval of the bill signals a potential destruction of blockchain and stablecoins in Poland, and he urges that the Senate and President Karol Nawrocki to step in and veto this legislation to safeguard Poland's crypto market. Now, Poland's president has pledged to support crypto. So Mencen's brother, Sławomir Mencen, was among the Polish presidential candidates who vowed to create a Bitcoin reserve if elected in 2025. In the first round on May 18th of 2025, he secured third place with a 14.8% of the vote, trailing behind Rafał Trzaskowski and Nawrocki. So in the runoff on June 1st, though, Nawrocki won the presidency with 50.9% of the vote. Days before the election, he pledged to support crypto, standing up against tyrannical regulations restricting freedom and innovation. So hopefully he steps in and vetoes that vote. Now, here is that tweet. I noticed that more and more people and companies are investing in cryptocurrencies. So what is my stance on this? Well, in Poland, innovation must emerge, not regulations. As president of the Republic of Poland, I will be the guarantor that that tyrannical regulations restricting your freedom do not come into effect. So let's see how true he is with that saying, because again, we're hoping he steps in to make these changes. Otherwise, Poland's their crypto market, that's what it's going to do. But in Poland, innovations must emerge, not regulations. As president of the Republic of Poland, I will be the guarantor, and that tyrannical regulations restricting your freedom do not come into effect, is what he wrote again, saying that. So that's some strict, hard level rules going on over in Poland. So again, we've seen what works and what doesn't work, and hopefully again the president vetoes this bill and just takes some good advice from the crypto community and the other lawmakers out there. So that's what's going on in Poland. Now, other power and accounts going around the world, Turkey is to give authorities power to freeze crypto accounts in a new AML rules. So more strict regulations and rules happening in some countries out there. But Turkey is to grant authorities power to freeze crypto accounts in new AML rules following the FATF standard. Now, again, when we talk about freezing accounts, it's referring to at least crypto exchanges out there, centralized entities, like accounts where you do not hold your private keys. Because again, the biggest rule in crypto is if you don't hold your keys, you don't own your crypto. So again, when you set up exchanges, accounts, or whatever, you're never provided a seed phrase or private keys. So that's what these guys would have control with freezing. So that's why if you want full control of your crypto, get a self-custody crypto wallet, Trezor, Exodus, MetaMask, whatever one you want to use, that's fine. Go for it. Just always never leave it on the exchanges out there, because again, they're going to have full control to do what they want, freeze accounts, move your money. It's not in your full control. So let's go through this article right here as my camera keeps blurring me out. So here we go. So Turkey is set to grant its financial crime authority, MASAK, the power to freeze and limit access to crypto accounts as part of the efforts to combat money laundering and financial crime. So according to Bloomberg, the proposed measures followed an anti-money laundering standards established by the Financial Action Task Force. The measures are expected to reach Parliament through a bill based on information from sources familiar with plans who requested anonymity, since the proposal has not been made public. Now, this continues to the Turkish government's ongoing AML crackdown and other financial crimes. Now, as of June's report from the state-run Anadolu agency revealed that cryptocurrencies platforms will need to gather more information about the transactions they process. Now, under the new requirements, Turkish crypto service providers must collect identifying information from users conducting transactions exceeding 15,000 Turkish lira, or roughly $360. Now, here is a tweet from cryptonews.com. Turkey is tightening its crypto AML regulations by February 2025. Now, all transactions over 15,000 lira will require KYC, so the Know Your Customer. Now, users will also be required to include transaction notes of at least 20 characters for each cryptocurrency transfer. Now, Turkey authorities to freeze crypto accounts, says the minister, and as they warns of exchange license cancellation. So the proposed requirements extend beyond just simple reporting. When the complete sender and recipient information isn't shared, platforms must hold withdrawals. Most withdrawals would be delayed for 48 hours, while first-time withdrawals from new accounts would be subject to a 72-hour hold. Now, Turkish authorities are also setting limits on stablecoin transactions to restrict the flow of illegal funds, particularly those connected to fraud and illegal betting. Now, users would be capped at $3,000 per day and $50,000 per month in stablecoin transfers. Now, platforms that comply with the travel rule and gather full sender and recipient information may offer twice the daily and monthly transfer limits. Now, Treasury and Finance Ministry Mehmet Simskin notes that the platforms failing to comply with the new requirements could face various penalties, including fines, denial of licenses, or cancellation. Now, the news measures follow earlier actions that Turkey has taken to regulate the cryptocurrency sector. In March, the Capital Markets Board introduced licensing and operational requirements for crypto asset service providers, granting full oversight of exchanges, wallet providers, and custodians. Now, here is the official Gazette notifications of the Chapter 1 preliminary provisions. So, now this regulatory change places considerable responsibility on crypto exchanges and service providers, requiring them to establish comprehensive customer verification systems. Now, while these regulations may strengthen consumer protection and protect Turkey's financial systems from illegal activity, industry experts caution about possible downsides like big players exit. For example, crypto exchange Coinbase has already withdrawn its pre-applications to enter Turkey's crypto market, and rival exchange Binance has also announced it would terminate its retail referral program in Turkey to comply with the local regulations. So there again, when you have these such crucial rules that get put in play, the partnerships they already have or they were going to have are pulling away, stopping, because it's like, in order for us to play a game, we can't do business with you. So again, this is why the rules really need to be talked about, considered before they get pushed through, because again, they got to look long term. They're looking for protection of their people, or they're looking to stifle innovation. So again, it's kind of one or the other. Do you want to improve the innovation in your country, bring this whole other sector to your group, or do you want to stifle it more? Sure, you're getting regulations. Yeah, we got some rules in play, but it doesn't benefit you at all. So that's some stuff they got to consider. But right now, Turkey ranks 14th in the global crypto adoption, despite its strict AML rules. So additionally, the Turkish regulatory framework, which forms part of the broader amendments to the Capital Markets Law, number 6362, introduced minimum capital requirements for crypto companies. Now, the cryptocurrency exchange must maintain a minimum of $4.1 million in its reserves, while custodians must maintain a minimum of $13.7 million. Now, there are also requirements concerning executive backgrounds and shareholder structures. The regulators come during increased scrutiny of the crypto sector, fueled by Turkey's rising position in global crypto markets. And according to the latest Chain Analysis 2025 Crypto Adoption Report, Turkey ranked as the world's 14th largest crypto market adoption this year. Now, Turkish regulators view this as a necessary for thorough oversight to prevent misuse within the sector. Now, to tackle fiscal challenges, Turkish authorities are also considering a 0.03 transaction tax on crypto trades, which could increase national revenue without heavily affecting the market growth. Now, we have not currently included taxation on profits for crypto assets and the stock market in our agenda, but there may be very limited fee of transactions on a transaction-based process. So that's what's going on in Turkey and Pakistan. Yeah, so two strict laws happening, kind of stifling their innovation there. I think Turkey was like a good one at one point. Like, again, they were number 14 with adoption-wise, but that may lower their ranking if they don't play games soon. Now, just getting away from the bummer downside news, like, oh, strict regulations in this country, how is adoption going to happen? Or that will move this amount of crypto. We're talking about this. Let's get to some positive news is now on like what could potentially happen this October or Uptober. Well, October is ETF month as 16 crypto funds await final decision. So Nova DS Wealth Management President Nate Garachi said it will be an enormous next few weeks for spot crypto ETFs as the SEC is due to decide on 16 applications. So which applications are these? Let's find out. So the crypto industry could be set for a flood of new crypto exchange-traded funds in October, with the U.S. Securities and Exchange Commission set to make their final decisions on 16 crypto ETFs next month. Now, the ETFs are connected to a variety of major altcoins, including Solana, XRP, Litecoin, and meme coin Dogecoin, which have final deadlines scattered through October. Now, up for approval first is Decentralized Exchange Canary's Litecoin ETF with a deadline of October 2nd, followed by asset manager Grayscale Solana and Litecoin's trust conversion on October 10th, and ending with the Wisdom Tree's XRP fund on October 24th. So according to the list of upcoming approvals created by Bloomberg ETF analysis, James Seifert, the decision could happen anytime before that deadline. And here is the deadline. So let's see, the last one we had was on July 31st, which was Bitwise's 10. Did that one get approved? It was a basket. Do not know. But yeah, our next one will be Canary Capital's Litecoin. So the next one's up will be Litecoin's ETF. And then we have a handful of Solana, one Dogecoin from Grayscale, which will be October 18th, and a handful of XRP. So again, bullish lines for these tokens, because again, if they do get approved, gives these coins more exposure and more revenue coming into it. Revenue, money, not really revenue, more money coming into them. But analysis from Bitfinex Crypto Exchange predicted in August that a new altcoin season or rally could be the spark off, so let me restart that. So analysis from Bitfinex crypto exchange predicted in August that a new altcoin season or rally could be sparked off the back of crypto ETF approvals that provide investors with exposure to the coins with less risk. So this could be an enormous next few weeks in ETFs. So the ETF analysis and Nova Diaz Wealth Management president Nate Garassi said in an X post on Monday that it will be an enormous next few weeks for spot crypto ETFs because of all the filings approaching deadlines. Now, this starts this week with a deadline on Canary Spot Litecoin ETF, which will be followed by decisions on Sol, Dodge, XRP, ADA, and HBAR ETFs. I didn't see that HBAR on the list, but I guess that one's part of it a little further down. But though the SEC can approve any or all of these whenever they like. And there is that tweet from Nate Garassi. But meanwhile, crypto trader Dan Crypto trade-styled October as ETF month, but noted that two major players like Fidelity and BlackRock are absent from the list. So none of the ones with deadlines in October were issued by Fidelity or BlackRock, which are the two major players in crypto ETF space. So regardless, this might be something to watch out for in the weeks ahead, Dan Crypto Trade said. Now in June, Safer placed odds that the SEC is approving the various crypto ETFs coming up for a final deadline in October at a 90% or higher, sometimes in 2025. Now the SEC makes approvals easier going forward. The SEC has delayed decisions on multiple crypto ETFs throughout 2025, setting several new deadlines. However, the regulator has also taken steps towards shortening the timelines amid a friendlier approach to crypto. The SEC approved a new listing standard for commodity-based trust shares on September 17th that could shorten the path to launch future spot crypto ETFs. Now, Safer said at the time the policy change would be a positive move toward a wave of spot crypto ETPs launching, and the fellow ETF analyst Eric Bashunas also speculated that there could be many more soon, pointing to 22 coins with futures on Coinbase that were eligible for spot ETFization. So since the change in listing standard, asset manager Hashtag has already expanded its crypto ETF to include XRP, Solana, and Stellar. So lots of crypto ETFs that could be pushed through. So again, keep an eye on it. We'll pay attention and let you know what happens. And again, if they do get approved, they're not the big players out there, but I think we will see a little movement because of it. Again, a lot of people are always speculating on BlackRock and Fidelity being the big players in ETFs, but these guys can have a little bit of movement with it. Now, last little bit of articles I have for you is just, Cardano and Chainlink. Cardano Foundation unveiled its next phase of the network roadmap for mass adoption, and nothing new here when it comes to they lay out the roadmap, what they plan to do. Again, it's always around DeFi. It revolves around accelerating global adoption. It encompasses a shared strategy that spans decentralized finance, Web3 governance, and real-world assets integration. So this is what the Cardano will be working on. Don't really need to talk about expanding because the article didn't go over what they're doing. I just saw ADA news, new foundation. Nothing really new here when it comes to upgrades. I see it all the time with Ethereum. It's this is what Ethereum's doing. And it's we're going to work on DeFi, faster transactions, global adoption. So this is kind of a repeat of what everyone usually always says. But Chainlink makes a stride in financial integration. So let's cover this last article, and then we will end the show. So in a significant development with finance, the convergence between blockchain technology and traditional financial systems is advancing. Chainlink noted for its role in linking blockchain smart contracts to real-world data. Now, this is emerging as a critical player in this transition. Identified by investment bank Jefferies as potentially foundational, Chainlink is poised to influence the integration of the conventional finance with blockchain innovations. Now, recent reports point to Chainlink's growing importance, signaling a pivotal moment for blockchain's intersection with established financial structures. Now, how does Chainlink facilitate this integration? Well, according to Jefferies, Chainlink's decentralized Oracle network is a key component of its infrastructure. It is expected to have a profound impact on the capital markets by securely connecting smart contracts to external data. Now, Chainlink enables novel uses such as tokenized asset settlements and improved insurance models. A testament to its role is its collaboration with over 2,500 projects, including partnerships with Swift and JP Morgan, reinforcing its position as a bridge between traditional finance and digital assets. Now, why is Chainlink gaining popularity? Well, there's the rise in tokenization. It has been a significant driver, turning conventional assets into digital tokens to improve liquidity and operational efficiency. Now, technologies like Chainlink's cross-chain interoperability protocol facilitates smooth interaction between on-chain and off-chain environments. And furthermore, Jeffries notes that as tokenization's trend accelerate, Chainlink's native token, will undoubtedly observe increased utility. So as financial markets evolve, there is an anticipating that institutional investors will increasingly favor blockchain solutions for settlements, positioning Chainlink's advantage blockchain growth across various sectors and underscores its potential for achieving real-time settlements and autonomous, paving the way for new opportunities. And it's true, like the Chainlink is a big part of it. We're just talking about, I pulled away those articles, I took them away. But like earlier when we were talking about the JP Morgan's blockchain integrating with, was that Swift? Was that one? Or was it Swift doing with the consensus? It was one of them, but I think JP Morgan did use Chainlink, a part of that, as well as Ondo Finance. So yeah, we're getting a lot of growth in this sector for off-chain and off and on-chain transactions and data, how it's communicating, and Chainlink's Oracle network definitely does do what it's doing. But despite the competition from firms like Layer 0 and Pyth, Chainlink's established network and strategic edge offer a robust competitive advantage. Jeffries remarks that Chainlink's network effect and first mover status could create a lasting protective barrier in the blockchain infrastructure. Now, comprehending these changes allows stakeholders to adapt and capitalize on blockchain advancements, enhancing asset management and operational efficiency. Now, Chainlink's continued expansion solidifies its influence amidst growing tokenized asset valuation. Chainlink's involvement with over 2,500 projects highlight its growing ecosystem. We got collaborations with major institutions like Swift and JP Morgan, which reinforce its prominence. So yes, like I did call that correct. Now, technologies like CCIP are pivotal in enabling seamless cross-environment interoperability. So keeping abreast of Chainlink's strategic position and technological advances is crucial for anticipating trends in finance technology and understanding their global impact. Now, staying informed enables leveraging blockchain's potential for secure and efficient financial transactions. So yeah, so Chainlink's still killing it and is huge for bringing our next financial integration, or it's definitely going to be a part of this next financial integration. And again, they already are using with JP Morgan and Swift. So yeah, Chainlink is like one of those large cap crypto coins out there. So like when we're talking about like the altcoin space, like when are we going to hit alt season? Well, it always goes into Bitcoin, then Ethereum, then the large cap coins, and then altcoin season. So right now we're still getting word and news. Money's flowing into the large cap coins out there. So we could be very, very soon from the alt season, which I keep calling. I want it to happen now. I wish it happened months ago. But hey, these are just more opportunities for you still to add in a couple more coins, top off your bags before we do see a pretty nice candle, which everyone's calling for us. Well, they're mainly calling for a Bitcoin candle, but all coins should be experiencing huge moves with it. But that's it for the news I have for you. Bitcoin's price is currently at $113,804. Ethereum's at $4,100. Our fear and greed index is currently at 39. So people are still fearful, but I think because of this price movement, we may see the fear and greed index go into neutral territory tomorrow. Like here, let me click refresh. Maybe that we're already going up. Nope, still 39. So yeah, so I feel people are slowly getting out of the fear territory. We're just going to pay attention to Bitcoin's price, see what happens. We're going to have another little dip, and we're going to bounce from 108, 113, or is this the moment up now? So let me know your thoughts down below. But that's it for the news, guys. Hope everyone has an awesome Monday. Stay safe out there. Always do your diligence when researching coins out there. Don't just jump into any coin because somebody online said like, oh, this coin's going to go to the moon. It's like, no, it's not going to. Like, do your actual research. Look at the tokenomics. What's your actual utility behind it? And yeah, so that's it, guys. Hope everyone has an awesome Monday, and I will see you again tomorrow. Oh, yeah, heads up tomorrow. I have a meeting at 12 o'clock, so I won't be able to do the show on time at noon, but I have scheduled it into my calendar that I will be doing the show at 3 o'clock after our crypto class, which is going to be on why the fiat system is going to zero. And then I got some other classes going on this week. We just posted it online to see what class we'll be teaching this entire month of October. So yeah, if you guys want to be a part of a crypto class, join the Bitcoin Ben Crypto Club. We just went blurry. So guys, I will see you tomorrow at 3 o'clock with some more crypto news. So take care. Peace.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges, it's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.